All right, welcome back. This is the Something Ventured podcast. I am Kent Lindstrom. I am your host. My guest today is Elad Gill. How are you doing?
Good, thanks. Thanks for including me today.
Yeah, thanks so much for doing this. I'll walk briefly through Elad's background, but normally as if I go through people's careers, we'd be here for a month. Um, after getting educated at UCSD and the likes of MIT, worked at Google, founded a company that was acquired by Twitter, then was a VP at Twitter. Founded a company called Color Genomics, which I think a lot of us have heard of because it played a big part in the COVID response, at least here in California. Um, then that company was an investor as well, and this is where it gets really extraordinary. And I won't even go through all these, but the likes of Airbnb, Airtable, Brex, Checker, Coinbase. I'm only up to C, Deal, Figma, Flexport. Really extraordinary. And is a prolific writer as well. Wrote High Growth Handbook, scaling startups from 10 to 10,000 people, and writes a blog, which, we've all seen a lot of blogs, but this is a blog that comes out pretty frequently and is pretty deeply thoughtful on a lot of topics. So I'm tired just reading all that stuff. How did you animate like into technology initially? Like, now you've done all these things and you've worked at the most famous companies and started the most famous companies, invested in the most famous companies. What was it in your earliest days that kind of brought you into this world?
Sure. Yeah. I mean, I always thought different modes of technology were really important in terms of human progress and impacting human lives and sort of and that technology could be biology, it could be computer science, it could be a variety of things. And so, as an undergrad, I studied math and biology, and then I got a PhD in biology from MIT, which you mentioned. And originally, I thought I was going to be an academic and try and develop different things that could be really useful for human health. And then about 2/3 through the way of my PhD, I really decided that I wanted to go and build companies and get involved with startups and things like that. And so, it felt like the best way to have impact at that point was just be to go more down the software route, simply because in biology, I think they would have just stuck me at a bench, pipetting things, clear liquids from tube to tube all day. Um,
Yeah.
uh, because it's a very hierarchical sort of industry, but also because there was this wave that was happening in terms of the internet. And it just felt like all sorts of aspects of human life were being transformed very deeply. And so I thought it'd be really exciting to be part of that transformation.
Yeah. So it was when the internet was cool, basically.
I
Like
still think the internet's cool.
yeah, it's very cool. But I think there's something too, like early on, I think when we there was something about that period, and I've mentioned this before, something about that period, that very early period where when you first logged into now people just take for granted you got the Wi-Fi in there, the whole joke Wi-Fi in the airplane. But there was something about the first time you kind of modemed into something and you realized in your head, like, I'm on a server at the University of Minnesota and I live in San Diego. And I don't know
Mhm.
what that means. I don't know that in the future that means an iPhone or whatever. But boy, it sure felt like something.
Yeah, I mean, I think similar things happened when real smartphones came out. You felt that same thing. And then I think with crypto, you feel the same thing. And now with generative AI, you feel the same thing. And so I feel like with these subsequent technology waves, you suddenly get this glimmer of, wow, something is really going to shift here.
Yeah.
And it's a really deep-rooted sort of thing in your gut, right? Obviously, you appreciate it mentally and logically, but at the same time, you can kind of feel that potential.
Yeah.
And so, absolutely, I think that was one of those really unique moments in time where you're like, the world is changing. And it went through all the dynamics that obviously crypto's going through, and other ways have gone through. Oh, does this really matter? And is this kind of a toy? And is it really that interesting? And nobody uses it, and all the rest of it. And that that happens with every wave.
Yeah.
So.
And do you think we are now in, one of these, having that perspective of having been involved in the earliest moments, and now, everybody's always analogizing. Right? You always get these sort of, well, it was all over in 1999, but it really wasn't over. It was just the beginning, and all the VCs, removed the internet from their website, and so crypto's not dead. It's 1999 all over, and the next Yahoo / Google / eBay is out there. Is that an accurate narrative, do you think?
I think it's reasonably accurate. I think maybe it's more like right before Web 2 for the internet analogy, because we already had in the late 90s or early 2000s, we had Google, we had Amazon, we had a different form of Apple, we had Microsoft, right? We had a lot of these giants emerging. And then around 2004 through the next decade, we had the next wave of really interesting internet companies emerge in terms of the social wave, like Facebook, content like Netflix, mobile devices suddenly became a thing, right? And so we had these subsequent waves. And I feel like now we have a few things that are established in crypto that maybe 5 or 6 years ago weren't there, right? We have Ethereum, which didn't exist really, more than, I guess it launched in what, 2016 or something like that.
Yeah, that's right. Yeah.
So 6 years ago. So, there's a lot that's happened. And I feel like Bitcoin is a big thing now, obviously, and it always was. But, and then you have marquee companies like Coinbase and the like. And so I think we have a bit more of an ecosystem. And that's why I think we kind of had like the first wave of crypto happen and solidify. And now we're moving into like subsequent waves.
Yeah. Do you think the entrepreneurs that you meet today, do they have the same as I kind of barely recall this phase of the internet, but I do remember that people would go work on something. I had a friend who had an offer at Bain and eBay, who was an early guy at eBay. And the zeitgeist was you're insane not to go work at Bain and work at it was kind of a weird thing to do. And if you were Steve Jobs or certain people, you did it. And now it's almost like a career path, maybe even fetishized for some people. I'm going to be the next Mark Zuckerberg. Do you see the same, and maybe you see this more with crypto than anything, the same thing animating entrepreneurs today that used to kind of animate them and make
You know,
them
I
do this
think
crazy thing?
I think we're definitely kind of lacking pirates right now. There's a Steve Jobs saying that, do you want to join the Navy or do you want to be a pirate? And being a pirate meant joining Apple. And I feel like over the last 4 or 5 years in particular, we kind of moved into a mode where, to your point, joining a tech company was no longer viewed as risky. The most popular major at multiple universities became computer science, and you had kind of the mainstreaming of tech. And in reality, there aren't that many innovative people in society, and that's good, right? Because if everybody was innovating, the trains wouldn't run, you know?
Right.
Um,
Right.
and so you don't want every single person in the world to be a founder, but suddenly everybody thought they were, and everybody wanted to get in technology. And I think like the average quality of people starting companies dropped because there were so many people starting companies.
Yeah.
So even if you held the number of great people fixed, or you doubled it, or whatever number you want to apply to it, the overall multiplier in the industry went up even more dramatically. And so the average founder's quality degraded. And I feel that was true up until about 3 or 4 months ago.
Yeah.
And I think there's spectacular people starting companies again. And there were before, but it's just the density of them has gone back. It's renormalized. And in part of that, I think, is because a lot of people who were kind of the marginal founder are now staying at the mama companies, Meta,
Yeah.
Alphabet, Microsoft, and Apple. But I think part of it too is that because of this wave of AI-centric companies, some really outstanding technical people are sort of leaving these larger organizations to start things themselves. And so you just have these extremely smart, true believers
Yeah.
starting companies again, which is very exciting.
Yeah. It does feel like a long time you saw lots of companies that were sort of, like you get it. Like it was a customer, it was another thing to help with, a thing that already exists. And it was kind of better, but it wasn't like a sort of thing where you saw it and you kind of went, what the heck is like, what is this thing? This doesn't make any sense. Crypto, like the first time crypto, you go, what the Bitcoin? And there's it's on some thing and I have to write down 28 words. And it's just like,
Mhm.
it's not like anything else you see. It's not like, oh, this is like Salesforce, but Salesforce is terrible and ours is better. It's that is are both crypto and AI, because it seems like it's two things happening at once. Do you think both of those fit into that category of something where you're like, yeah, no, people are going to come up with completely different things based on these that are outside of your imagination?
Absolutely. I think fundamentally, too, if you look at the cohorts of people who are working on one or the other, they tend to be very overlapping in terms of the things they're interested in, the things they study. Like a lot of the smartest computer science undergrads are basically really into AI and really into crypto, right? Those are the two areas that they kind of go deep in. And I think that's not by accident. I think it's just attracting some of the smartest people right now.
Yeah.
And
And do
obviously,
you,
there's great people still starting like SaaS companies and
of
things like that.
course,
It's not meant
yeah.
to.
It seems like in history, a lot of companies started not with the technology. And I think of something like Uber, where the iPhone comes out, there's location on your phone, and Foursquare comes along, and everybody's like checking into places, like kind of an obvious thing to do with it. You check in and you become mayor. But But Uber came along and said, no, what you actually do with location on the phone is you let drivers and people who want rides find each other. And that
Mhm.
didn't really come out of necessarily looking at an iPhone like you might look at crypto and say, oh, here's the obvious thing to do with it.
Mhm.
It came from the other side. Somebody with a problem, I can't get a cab, looks
Mhm.
around the world and sees a technology, grabs the technology.
Sure. I think the big breakthrough really for things like Uber that prevented them from happening before wasn't just the iPhone, but actually GPS lookups. Because when I helped get the mobile team up and running at Google, the carriers really had a lock on the industry. And when you wanted to do a GPS lookup, you paid $1 per lookup.
Mm.
So every time you take a look at a map and you look at your location, it costs you $1. So that means nobody used location-based services because it was just too expensive. And the carriers took that as evidence to mean nobody wanted it, which was really stupid, right? But that's how carriers tended to act back then. And when the iPhone came out, the really brilliant move was to break all these different services that the carriers charge a lot of money for and effectively make them free. And then suddenly you opened up things like Uber as a potential option. The other thing that kept happening, by the way, on all these carriers was every year or two, somebody would come up with something which is effectively WhatsApp or any messaging client, where it would allow you to bypass text messaging. And before there was an open ecosystem due to Apple, all those apps would eventually be found and kicked off of the platforms.
Right.
And so you had the carriers protecting a revenue stream. And so a lot of the innovation that I think that happened with the smartphone wasn't just because you had a supercomputer in your pocket, although obviously that was important, but it was actually breaking the market structure. You were breaking the carrier hold on the industry. And I think that matters equally as much, and it's very under discussed.
Yeah. How did you become, as you kind of think through these things, how did you make this transition from like working at a company to investing? And I mean, you seem like you're doing more than investing. It feels like you're investing and you're kind of trying to educate a set of people, presumably entrepreneurs and founders. Why do that instead of start another company? I mean, you seem to have a little bit of a knack for it.
Yeah, I started investing very organically. So just as I was helping friends of mine while I was running my own companies with different areas, they just started pinging me and asking if I want to invest as part of rounds. So it was kind of accidental. Um, so it just kind of emerged organically, and then I started off just investing while I was running different things. And so for the first, I don't know how long, 7 to 8 years of investing, I was also running companies or at companies at the same time. And every couple of years, I end up trying to help start something, get up and running, either as an incubation or just really deeply helping something. And so, to your point, I do really enjoy building things. I think it's really great to have the opportunity to get together with a small team and just start iterating on things and close the first few hires and help negotiate the first few partnerships or whatever is needed.
That's great. And what is going on here with your investing? What this is, you have a notably extraordinary portfolio. In fact, I've kind of posited it's kind of interesting. There was, people talk about this kind of golden age of seed firms when the seed firms first kind of developed as this independent thing, maybe 10 years ago. And you look at them and none of them, they all have a big hit or a couple of big hits and they're all wealthy because of it. But I don't know if any of them are in quite as many famous names as you seem to be in. What's going on here? Are you causing these companies to be huge? Are you investing in so many things that it happens that way? Is there something that helps you pick? I mean, it's an extraordinary portfolio you've
Yeah, I
notched
think
up.
it's I think it's two or three things. I think, overall luck plays a role in all these things. I think that in the time that I started investing, particularly as somebody who was running a company, it was really clear that all sorts of things needed to exist that didn't exist, right? Like I actually reached out to Stripe. I reached out to Patrick at Stripe kind of randomly, simply because, when they launched, I was like, wow, this is something I would have used in my company, right? Or Gusto I funded because anybody who'd used ADP or Paychex knew how bad it was, right? And so there's just a lot of things are rippling now, right? With what Parker's doing, it was just, he's obviously stitched together a variety of different services that are really useful and should be offered by a single platform. And so, I think part of it is if you're operating, you end up just considering you kind of have a better view of what's actually needed. I think part of it is starting to invest at a time when there just wasn't that much noise in the ecosystem, right? The average ratio of good company to so-so company was much better than it is today.
Yep.
Um, And then I think, success begets success, right? If you end up getting involved with the great things and people go to those founders and ask them who helped them early on, if you actually help them, and they'll suggest you. And so you just get referred to other great people. And so I think some of these things kind of build off of themselves over time too.
Yeah. So just being part of an ecosystem, and how important, not just being, but how important are you? I mean, you've written a handbook. How much impact do you have on these entrepreneurs? Meaning, how much of this is, okay, I picked the right company and Travis Kalanick's not going to listen to me anyway. It doesn't matter if I give him the best advice in the world. Or do you think, there's entrepreneurs who are really thoughtful and you've just done it before and you can tell them what to do and they take your wise counsel and, instead of $100 million company, end up with a $1 billion company?
I think the success of companies is almost always driven by the founders and their early team. And I think the average investor is not very helpful. And so I'm kind of saddened sometimes by the bar on what it means to be somebody who actually helps a company. Like sometimes a founder will tell me, "Oh, you're my most helpful investor." And I'll say, "Wow, that's really sad." Like that
Yeah.
means there's a really low bar. And that doesn't mean it's not because I'm not trying to help. It's just because I think fundamentally, I'm a big believer that the biggest raw determinant of a company's outcome is twofold. For the 0 to 1 phase, it's really product market fit. Can you actually build something that people want, and deeply want, And then the second phase of a company going from 1 to N, and that N is kind of bounded by the quality of the team and the quality of the founders. And so ultimately, you could have an amazing team in a terrible market and they'll just lose. It just won't work. And you can have a great team in a great market, and then you have that really magical moment where you end up with the Google or you end up with a Stripe or one of these, really iconic companies.
Yeah. And when should a founder, as you kind of watch this, as an investor, sometimes I feel like I'm watching something and know it's kind of over before it's over. When should a founder, or maybe you can't when you're in it, but just kind of know that you've been doing it too long and the results are too small, but you have capital and you can keep going. I mean, is there something that you should feel that you should feel or
Yeah.
see or
Yeah, I think there's two or three answers to that. The first one is, from a sheer hygiene perspective, once a year, you should tell everybody that you're going to think about whether you should sell the company or not. And you should preface it by saying, "I'm going to do this once a year from a hygiene perspective, so it's not emotional and we just have the real conversation." And that's when you can create an unemotional context by which you can have that conversation with your board. Are we growing at the right rate? Are things working or not? Do we think we have real product market fit? If we were to sell now, who would we sell to? Should we build those relationships just in case? All that kind of stuff, right? And so I think that's really underdone. And some companies did that. I think actually Ben Horowitz mentioned, maybe in his book or in a blog post or something, that they used to do that for Opsware when he was running it, where once a year they'd have that conversation. And I think that's really good etiquette, because again, it takes all the emotion out and it doesn't make it sound like you're trying to sell, and it doesn't make the board members sound like they're trying to push you. You can just have a rational conversation. Um, I think over the last few years, there have been exceptionally few exits. And there's a few reasons to that. I think number one, there was enormous ease in taking out secondary. And because companies were constantly being preempted, um, you could take out a lot of money without actually having a successful company.
yeah.
I think that's one of the things that helped drive valuations up. I think the second thing is that, uh, valuations really got high, which means that the acquirers didn't want to pay up for it.
Right.
And lastly, I think you could always raise more money, and so nobody ever really had to have the hard, thought or conversation around whether it made sense to exit or not. And so when times are, abundant, when things are going really well, the number one thing you should be checking yourself on is this really working and should I exit? When times are really tough, often the best thing to be asking yourself, and I should say tough at steady state, not like right now where it's like tough and everything's correcting. The best thing you can ask yourself is, how do I keep going? Right. And
Yeah.
I think what happened is we had a generation of people who grew up in tough times telling everybody keep going no matter what. And in reality, they should have been telling different people, hey, maybe you should exit right now because your thing isn't working and it's a really great environment because everything's so overvalued.
Yeah.
And I think now we're going into a period of time where everything is falling dramatically in value. And there's this is recorrecting to a historical baseline. It's not like we're dipping below. And we're going to have a flood of exits next year, in my opinion. So I think 2023, especially towards the tail end of the year, we're just going to see lots and lots of companies exit because they're just going to be out of money.
Right. Yeah, that the secondary thing is interesting. And this is when somebody, is working at a company, they founded it, they own a portion of it, and rather than selling the company, they sell a portion of their shares to somebody else, often for tens of millions of dollars. I think in the case of Hopin, it was $100 million or something like that. What's interesting is I think in the early 2000s, it it was like frowned upon. Like I knew some people at some very successful companies, and the VCs. It was a little unfair. The VCs came in and they had their equity, and they had their kind of the big salaries. But if you were a founder, it, it, it was just
Oh
looked
yeah,
as like
yeah.
negative.
I'm absolutely a proponent of people selling secondary, and I did it, for example, at Twitter, right? Like while after they bought a company that I founded, I sold some secondary in Twitter with company permission, of course, but I did it. And so I'm by no means saying that people shouldn't have secondary opportunities. I think the question is, at what point does it make sense for somebody to sell secondary? And it used to be that you do it when the company was clearly working. And clearly working could mean a few $1 million in revenue and some market cap in the hundreds of millions. And what that shifted to is you started to see founders take out money in a seed round,
Yeah.
right? You're doing a seed, it's like a
Right.
4-month company and you're taking out secondary, and then you take out secondary in the A, and then you take secondary at the B, and valuations are 5x where they would have been. And so, you can take out $10 million, $20 million in a year without something working, right? It was a
Yeah.
really dramatic shift over the last 2 years in particular. And that was also driven by the venture capital community, right? People were offering these term sheets with secondary baked in. So I absolutely think secondary is a great tool. I think it can keep people focused on the long run because they don't have to exit if they have some expenses or other things they need to deal with. They want to buy a house, they want to put their kids in school, whatever it is, right?
Right.
Um, but the flip side of it is things really swung in the opposite direction and really got out of hand on a relative basis. And I think that's one of the reasons we have so many companies, or one with such high prices, is there's a very strong financial incentive as a founder. Because if you could sell 1% for 5 million or 1% for 7 million, that's really material in terms of,
Yeah.
you set the price.
And what do you make of what's happened over the past? I think we kind of went through a few phases, and now we're sort of maybe in an acceptance phase that hey, things have gotten pretty tough for companies. What's your sense of what has sort of happened here? I mean, the interest rates went up, the stock market came down. Do you think VCs have been kind of, or investors have been ready for this for a while? Is this a natural cycle? Like, what is your sense of what's going on in Silicon Valley?
I mean, we had a very natural monetary environment over the last 2 years. And even before that, right, with quantitative easing over the last decade, when often we didn't quite need it post the great financial crisis. But going into the pandemic, we did a number of things, right? We dropped interest rates effectively to zero. We printed a ton of money and we airdropped it on a very low population of people so they could spend it.
Yeah.
And that was all because we basically locked down the country to keep people at home in a strategy that had never been employed before and was completely unproven, right?
Right.
And so what we ended up doing is anytime you print money and you give it to people, you get inflation. That's happened in every country in the world whenever it's done it over all of history.
Yeah.
And so, it was kind of silly to see people blame inflation on Putin or blame inflation on all sorts of different external factors. And you're like, all these governments around the world printed a bunch of money and handed it to people.
Right.
That's inflationary.
Yeah.
Um, and so now to counteract the really high inflation rates that we started to see, because once inflation gets out of hand, it's very hard to tame it. We've started hiking interest rates. And the claim was we'd also quantitative tightening. We would sell things off of the Fed's balance sheet and things like that, although that really hasn't happened to a big extent. And in parallel, we've actually had other types of attempts at airdrops, right? The college loan forgiveness is a good example where we're just continuing to inflate the economy.
Yeah.
But or Biden actually sold off strategic oil reserves, right? Or, leading into the midterms, he sold off about half of our oil reserves, which was also deflationary because you're dropping energy prices, right? And so you're effectively creating a lower view of inflation that really existed. So we ended up having to hike interest rates, and that did a few things. One is it obviously tightens up money supply. It means you just have less access to capital for any asset class. Two is the way that you think about future cash flows changes. You start to discount them more heavily. In other words, you think $1 in the future is worth dramatically less than $1 today. When you have low interest rates, you think they're closer to parity. And that means that anything that's a growth company's multiple has to drop, because the multiple on a growth stock or a growth private company is based on those future cash flows because it's growing so fast. You're kind of calculating what its future looks like, and so you see multiples compress. And then obviously the last piece of it, which is the intention of these interest rate hikes, is you want to cool the economy so that wages drop and that demand drops. Effectively, you want to create a recession or you want to create dampened demand. And that's really, I think, coming this coming year, right? We're going to see all three of those things happen. And they've already been, two of them have been happening already. And that's one of the reasons we've seen the multiples sort of go back closer to or right around historical norms, right? Like multiples in technology were at all-time highs over the last 2 years. They weren't at normal levels.
Yeah, it's funny. It seems like a lot of the inflation stuff, and not to be political about it, it was just like everyone's being super ironic with the Inflation Reduction Act, which spends a lot of money. I think in California, the governor wanted to send or is sending everybody like a $400 check to fight inflation. And it's sort of like if you even took like a 101, economics class, it, it, it it's just kind of crazily off, you know.
Yeah, it doesn't make sense if what you really want to do is tame inflation. It's kind of interesting because if you look at California wealth, which is in part tech created, right? A lot of the tax revenues are coming from different aspects of technology companies and their employees. Really, it should be treated more like Norwegian oil wealth. You almost have this money gusher that's like a natural resource in some sense.
Yeah.
And in Norway, what they did is they created a fund where they said, we're going to invest this fund for the future so that we have something for a rainy day when we need it.
Yep.
And we have something like, I don't know the exact number, $60 billion tax surplus in California. That seems like a really great thing to use on building out a deeper energy grid, dealing with forest fires, building out desalinization plants, but also investing in the future. Put the money aside and save it. And so it's really interesting to see the policies that some really smart European companies have adopted in terms of dealing with sudden wealth, and the contrast that has with how we think about it in some states.
You think that's ever possible in the U.S., like for a governor, anybody to govern California and actually have the wherewithal to make that happen, to put the money aside, to invest it in something other than whatever we're spending money on today?
Absolutely, yeah, absolutely. I mean, it's just political will.
Yeah.
We can absolutely do that.
So what do you make of running a company now? So we've had, these big tech companies have had a bunch of things sort of happen recently, and I guess I'm glad I'm not running a company. You had people who start working from home, which is a pretty big experiment, and then kind of not stop working from home in a lot of cases when the economy came back. You had people really starting to bring their whole selves to work and a lot of kind of non-work things going. And now you're seeing layoffs, but putting Twitter maybe is not an example of anything, but a lot of layoffs that have big headline numbers, thousands of people, but and they're real people, and it's terrible, but are 10% kind of layoffs. What is your thoughts as being a tech exec in this environment?
Yeah, I think there's a few different topics sort of mixed in what you're saying. I think fundamentally, one big thread is how do you reset your company right now in a very different era from when it was built, especially built up over the last 2 years, and we can talk about that in a minute. I think right now what a lot of companies are doing is they're trying to think ahead in terms of what does the next few years that are coming look like, and what does that mean for them in terms of what size employee base should they have, how much money should they burn, how should they think about their customer base and revenue growth, and all those different aspects of it. Unfortunately, I think many companies are still under extrapolating what's likely to come from a macro perspective, and therefore the degree to which their business may slow down, or alternatively, the degree to which they may have overbuilt during the last 2 years when capital was really abundant and cheap. And so you see companies, 3-4 years ago, if you had $1 million, $2 million in revenue as a SaaS company, you probably had somewhere between 5 and 20 people,
Right.
something in that range. But during the last year or two, you saw companies with that same revenue basis, $1 million, $2 million in revenue, raise $100 million at $1 billion valuation, and then hire 150 people.
Yeah.
They did it because that was still 3 years of cash, 150
Right.
people.
Right.
And unfortunately, what that meant is you had companies way overbuild before product market fit. And often the bigger you are, the slower you move, right? And often when you're at that lower revenue basis, you want to move more nimbly. And so those companies, in some cases, are doing layoffs now. And if you cut 10, 20% of those companies, you're still probably 80 people too big,
Right.
right? And so everybody just assumes they'll grow into it, but really, in a number of companies will, but a bunch of companies will just end up burning all that cash. And you end up with these almost performative numbers. Everybody is effectively, or not everybody, many companies are cutting 10 to 15%, and that's the headline number. And for many companies, that probably is the right number. But a lot of other companies should maybe be growing and not cutting anybody. And others should maybe be cutting 30, 40, 50%, right? And so it feels like there's almost this like performative series of layoffs that are happening. And the unfortunate thing about that is you'll end up with future layoffs later. I actually worked at a company like that when I first moved out to Silicon Valley. I joined a company that was 120 people. It grew to 150, and then it shrank to 15 people over 5 rounds of layoffs. And so I got laid off in the third round. And I remember before the layoffs happening, I grabbed a friend of mine and pulled him into an office, and I wrote on the whiteboard like the numbers. And I said, "Look, there's no way we can sustain this. We're going to have to do layoffs." And then, a month and a half later, the company announced its first layoff. And so it's kind of clear, right? It's just math. It's not magical
Right.
to figure these things out. And unfortunately, I think a lot of people are still thinking, well, things won't be that bad this year, and everything will come back, or we'll just grow into this valuation and this team size. And so I think a lot of the real carnage in the private tech markets is coming next year. Um, at the same time, we've seen this massive build out of the big tech companies. And Facebook, for example, went from 44,000 to 88,000 people over the last 2 years, and they did a layoff of 11,000 people. But that effectively just reset them to, I think, February of this year or something like that. It wasn't a real reset. It was like 6 months of growth went away during one of their fastest growth periods. Google went from 110 to 190,000 people over the last 2 years.
Yeah.
And this is back to the point of the types of people joining tech now have to be different because so many people are joining.
Right.
And so you're kind of shifting the base of who actually wants to join a technology company and for what roles and who you're hiring and what's the quality of the people and all the rest of it.
Yeah, it's interesting that one of the stories of the day that seems to fascinate everybody is Elon Musk taking over Twitter, and everyone seems to have a hot take on it. But one of the things he did, I think, is he laid off like 50%. He did not lay off 10% of people, and it kind of makes you wonder of all the criticisms and all the things he's whatever you're supposed to say he's doing wrong. It does seem like maybe he did one of the things right that you were advised to do, which is don't do 5-10% cuts, do one big painful rip the band-aid off 50% cut, and then everyone else get them refocused and the pain's behind you.
Yeah, and I think a lot of the larger tech companies just don't have the wherewithal to do that, and they're so profitable that they just don't want to do it, right? Because it's very painful to do. Um, and a lot of the metrics for success, in some sense, at some of these companies is how you're growing your team. I was talking to a VP Eng at one of these major tech companies recently, and he said that he felt that he was getting penalized because whenever they do growth projections for the various teams at the company, he was the only person or one of the few people who would say, no, my team size is fine. I don't need to grow it. I can do everything on my roadmap with the people I have. And then he would get slammed in reviews for not being aggressive enough, not being ambitious enough. Why isn't his vision broader? All this stuff. And he's like, I'm being penalized for not wanting to grow my team. My team is good the way it is.
Right.
And so there are these weird pressures that we never think about
Yeah.
as external observers that are applying to individuals in these organizations that drives them to grow it.
Yeah. Is there any mechanism here in all this? I think I heard some hedge fund or activists, I'll get the story wrong, send a letter to say Google. Is there any reset on the comp versus just the head count? Because one kind of notable thing is that the comp for a lot of these jobs is, uh, if you told most people what some of these folks get paid, it's really large numbers. Is there any way for that to change, fewer people to get laid off, or is that just not a cultural
It's
thing
always
that's going to?
possible that some comp will drop through just stocks repricing,
Yeah.
right? But some of the companies are then issuing incremental shares to people. I mean, if you think about it, when I talk to people who work at some of these large tech companies, the general assessment is 10% of people are killing themselves. They're working really hard. They're, really driving things. Maybe 30, 40, 50% are working like a reasonable pace. And then, 50, 60% of the company isn't doing much. And so you could argue that a chunk of big tech at this point is almost like universal basic income for people who went to a good school.
Wow.
You know, you go to Harvard and you can join a big tech company, and then you have UBI,
Right.
and you're just kind of hanging out, right?
Yeah. And do you think the CEOs we have, like Mark Zuckerberg or Sundar or whoever at these companies, I mean, they know that or they, listen to you, I'm sure. Do you think they can do it, or is it just, they're profitable enough and so they don't really need to and they won't, or will some of them really make these moves?
Yeah, the honest answer is I don't know. And it's always, by the way, easy to second guess somebody externally, right? Like obviously these people have, tough jobs and they're doing the best they can at them. Fundamentally, I think that um, it's often sometimes hard as well to assess who are the people who are doing good things and who aren't, and there's different ways you could actually do that, but you have to sort of recalibrate how you run the company. Um, and then lastly, what's the incentive to do it? Right. The
Right.
original incentive to kind of lock in all the talent was there used to be a school of thought that said, as long as you can lock in all the good people for yourself, you prevent your competitors from getting them.
Right.
And so in some cases, it may even have been strategic to do this from their perspective. We're going to tie up all the great ML engineers, machine learning and AI engineers, um, and we'll just pay them a ton of money, and then they just won't go and do anything that will ever threaten us.
Right.
It's actually a very reasonable strategy, actually, if you are printing enormous amounts of money. What's happening now, though, in this wave of generative AI and large language models is that many of those people are starting to leave the bigger platform companies because they can never ship anything and they want to start shipping because the technology has gotten so exciting.
Yeah.
So one of the biggest shifts over the last year has been the number of people leaving the major developers of these AI breakthroughs that never actually launched externally through them, but then got launched by OpenAI or open source projects like latent diffusion or other things like that.
Yeah. And what of the I want to ask you about AI in a second, but what about one of the grand experiments is everybody kind of started working from home. And I come into an office every day in downtown San Francisco and it's I don't know, they say it's 40%, seems like it's 10% of what it used to be. And it's
Wow.
funny, we invest in startups. I'm curious what you think about big companies and startups too. And we'll ask the founder, before we invest, how are you going to manage your team? And it's like, oh, we're going to be fully remote, all remote all the time. And it's somebody who's worked nowhere or, somewhere for 4 or 5 years and never managed a team. And we kind of try to, point out to them like, hey, managing a remote team um, is a pretty advanced management technique. Yeah, and you're going to tell me GitHub did it. I know.
Sure.
But kind of what's your sense on the whole? Yeah, we're not in the office all the time anymore. Is that good,
Yeah,
bad?
I think there's a few different things going on. One is one of the reasons that exists so strongly in Silicon Valley is anytime founders I knew wanted to reopen their offices, the local city government would pull the rug out from under them, a week before they were supposed to reopen, and there was a reopening date because suddenly there was Delta and there was Omicron, and in many cities people just kept going, and I think they have stronger work from office cultures now, and I think the Bay Area just kind of broke its own culture on that stuff. The very best uh, and one could argue parts of the world have changed in terms of the tooling available and everything else, but I think ultimately we're going to end up with a world where there are going to be a subset of companies that are back in the office together. There's going to be a subset that are hybrid, and obviously a subset that are remote first. Um, Most of the really great early stage founders I know are doing in person, and so they're doing like everybody's on site together.
Yep.
And there's obviously lots of companies that aren't doing that, but when I look at the people that feel hungriest and most ambitious, and I mean that at the 5-person stage, not the 500-person stage, they're all coming back in,
Yep.
or many of them, I should say, or most of them are coming back in. The later the stage of the company, the harder that is to reverse, although some are reversing it now. And this economic backdrop is actually an opportunity for those companies that choose to go back into the office to do it because they already have to do some form of employee attrition,
Right.
and they want to increase efficiency. And usually, the place where in person work helps the most is when you're doing something new and creative. And the place where remote works best is when you're just turning the crank on something that already is up and running and has momentum.
Yep.
And then obviously there's roles that work better remote. Obviously if you have field sales, those are remote roles. Everybody makes exceptions for outstanding contributors, right? You have a great set of engineers; they tend to work remotely if they want to. And that's been the case before COVID too, right? And so I think a lot of people are snapping back to this mode where at a minimum, they have 2, 3 days back in the office and everybody's back on the same days. And then you have, and in some cases, people are going back to 5 days. And then you have some exemptions for people that you think are exceptional. And then you do things like all the company offsites are now held at the actual offices instead of
Yeah.
holding them at a store or something else. So I think people are adapting. I think the economic downturn is an opportunity for founders or CEOs to rethink every aspect of their business because you're having a big reset. It's kind of shocking, and in a moment of shock, you can really change direction. And so that means if you want to go fully back end, you can. If you want to go fully remote, you can.
Right.
You want to change your culture or reset it. Maybe your mission drifted a lot during the last few years, and many of your team members are too distracted by external politics or happenings, and you want to refocus that. Or maybe you want to go back to a culture of frugality and certain forms of execution. You can do that. And so
Yeah.
now is really a moment in time where founders can do something really unique, and that moment in time will pass, right? So if you're a CEO considering what to do, now is a very good time to say, okay, we're changing what we're doing.
Right. I want to finish up, ask you about one of the things that I think is one of the most sort of exciting things is in the literally past, several months, it seems like AI has emerged as a hot topic, and a lot of the VC websites are adding a comma. They invest into the comma AI. What's going on? Like AI has existed for a while. I don't know if there's been some big technological leap. What's in the moment here that's a thing, or is it
Yeah,
a thing?
yeah, I definitely think it's been a technological leap. So I worked a lot on machine learning in different ways over time. So when I was at Google, I helped start the mobile team, but then I switched on to ads targeting, which at the time was some of the world's biggest machine learning systems, and then and natural language systems. And then when I sold my first company to Twitter, one of the teams that worked for me for a while was the search team, and so I worked on algorithmic search, which again is very machine learning and AI centric. And then over the last decade, I've invested in a lot of AI companies, across the different CNN and RNN and GAN waves. And the reality is that if you look at every technology wave that happens, you have a differential split between the amount of value from that wave that accrues to an incumbent versus startups. So, for example, the first internet wave, most of the value went to startups. The first mobile wave, probably 80% of the value went to incumbents, right? It was
Mhm.
the CRM company on mobile was Salesforce. It wasn't a brand new company, but you had some new companies that emerged that were really great, right? You had Instagram and you had WhatsApp and you had Uber and DoorDash and all these things that were really powered by mobile. Crypto is 100% startup value,
Right.
right? No incumbent has really captured much off of it. The first wave of AI basically all went to incumbents. It went to Netflix for recommendations. It went to Alexa for Amazon. It went to the Facebook newsfeed. And I think part of the reason for that was the technology was good, but it was good enough to get bundled into things, and you needed lots of data to train it, and that really favored incumbents. I feel like this wave is going to be more mixed,
Mm.
and maybe it'll be more like an 80-20. 80% goes to incumbents and 20% goes to startups, but 20% is a lot,
Yeah.
right? And so I think there's this really exciting wave now. And I think part of it is technology, right? We've had this really interesting breakthrough in terms of like transformer models in 2017 with that original paper on transformers at Google. And that really helped form the basis for the first GPT models. You had these diffusion-based models really emerging. I think the first papers on that were a couple years earlier, but it really took a bit of time for that to become more mainstream and become part of like the image generation stuff that we see now.
Yep.
And so, and you saw a broader wave of like unsupervised learning happen. And so I think it's technology based.
Yeah. Yeah. It feels like we're in that stage where most of it that maybe we haven't seen the thing yet. We're seeing the sort of Foursquare, right? Everybody's generating images of their girlfriend in the style of Dali or whatever, and it's really cool. But maybe it's not the thing that's going to end up being the thing that kind of blows us all away and just transforms everything.
Now, I think it depends on how you think about it, because we're already seeing applications get to some reasonable scale that are things that make sense. And they may not transform the entire world, but they're going to be really useful, right? That'd be something like a Jasper copy in terms of marketing copy and the ability to suggest and generate that. There's tooling like Hugging Face or, some aspects of weights and biases. There's obviously platforms like OpenAI. So we're seeing a number of startups actually emerge that I think are doing interesting things. And I view them as like the early signal that there is startup value this time,
Yeah.
because the prior AI wave, there was none of that, right?
Yeah.
Uh,
Right.
there was
Right.
basically there's a handful of startups that have sort of bridged over, but in reality, there aren't that many startups that have really gotten to scale. And a few have, but it's not the same level of crypto or the internet or mobile, right? In terms of the
Yeah. What wrapping up on a couple things. What your blog is pretty widely read, pretty broad in topics, and you must spend a lot of time, putting these, thoughts together on why Theranos is different than other, companies and things like that. What is this? What are you doing with that? Like, what is that doing for
uh,
you?
well, I mean, I guess there's two reasons to blog, or two reasons that have the types of posts that I do. One is there are certain questions that founders ask me over and over and over again.
Hmm.
And so it's sometimes easier to just write it up and then send a link than it is to do the same thing over and over again in terms
Right.
of either writing it in email or verbally, like talking about it. And obviously, I'm happy to talk about it. It's more just sometimes it's better just send a link. And so a lot of my blogs are like that. And then sometimes it's just something bubbles up that's top of mind, right? Like it's a little bit of a synthesis moment where, I've been thinking about something for a while. Like I wrote a blog post recently about large language models and the transformation I think that's coming with that. And that's stuff that I've probably been thinking about for the last 2 years or so. And I kept thinking to myself, oh, I better write this blog. I better write this blog. It'll help me solidify what I'm thinking. And I just didn't do it, right?
Right. Right.
I finally wrote it. But it kind of helps me synthesize up like what I've been thinking about. And sometimes it kind of feels like I have to write it. It's just like some thoughts are bumbling up. Like there's one that I'm about to write that I've been thinking about for a while, which is that, startups are effectively an act of desperation. And we kind of lost that for a while. But, if you think about it, doing a startup is incredibly irrational to do.
Yep.
It's really hard. It's really painful. It's emotionally taxing. And the main reason you do it is because you're either early in your career and it's your way to leapfrog, right? Which is why one of the reasons I think you see no like VPs out of a big company starting companies are very few, right? The opportunity cost is too high. You're not desperate enough,
Right.
or you're desperate to have something exist in the world.
Right.
You really want something to be built, and so that's something that I just keep thinking about, and I feel compelled to write it. Like it's not,
Yeah.
if it'll help anybody, but I just think it's an interesting topic.
Yeah. That's an amazing, like, I just love that thought. And I do, the people who want something to exist in the world, I don't know if they do better than other entrepreneurs or what, but boy, they're the ones that you really want to spend some time with. It's
Yeah,
pretty
and that's a
cool.
lot of the AI people right now because they've been working on it for years at these various big companies and they can't launch it. And so they go and start a company that they really want to exist outside, even though they have a really cushy job at, Google or Meta or the like.
What are you excited about now in terms of your, like, looking forward? I mean, everything's great, but in terms of investing, what's getting you excited?
Yeah, I think we are undergoing a multi-decade transformation across multiple threads at once. I think the cloud transition is still happening, so there's a lot to do in terms of data infrastructure and cloud and SaaS. Crypto is a big wave in the financial world. And then, ML, arguably maybe the next platform shift in terms of the thing that impacts lots and lots and lots of different types of products.
Yeah.
And so I think those are three ongoing waves that will play out over the next, 10, 20 years. It's not a 1 year thing. And so I think these are really big waves that are happening.
Yeah. And what are your thoughts? A lot of entrepreneurs listen to this, and like the word of late has been pretty grim. Like, if you're an entrepreneur, you're doomed not to raise money, and it's never going to work. And you should go work at Facebook, but you're probably going to get fired. Like, it's pretty dark. Like, what are your thoughts to somebody who's like, I really think there needs to be a thing in the world. Should they
Yeah,
wait
it's
a
about
little
a
bit, or is it?
desperation point. It's a desperation point. You have to really want to do this or have no alternative, right?
Yeah.
Uh, I think that was like one of the co-founders of WhatsApp, right? He couldn't get hired anywhere. So he was like,
Yeah.
crap, I'll just work on WhatsApp, right? And so it's just an act of desperation. I think the reality is, again, we're seeing this multi-decade transformation. So there's enormous room to build massive companies and have enormous impact on the world. And so I'm very techno-optimistic. I think there's lots of different societal problems that we need to solve that technology is probably a good approach to. There's lots of things that could really help different people in terms of building their livelihoods or improving their lives or their health. And so there's just a lot, or their education. So there's just a lot to do. And we're still in the early innings of all this stuff, right?
Yeah, that's great. Well, how do people find you if they want to use your blog, kind of the way people usually get to
Yeah,
your
they can find
thoughts and
me
your
on
guides?
Twitter. I'm at Elad Gil. My blog is blog.eladgil.com. My website is eladgil.com. So folks can check me out on any of those places.
Great. Well, thank you so much for doing this.
Oh, no, I really appreciate it. Thanks so much
Yeah.
for having me on. It's a lot of fun to chat.
All right, this has been the Something Venture podcast. My guest, Elad Gill. Talk to you next time.